What's up everyone, hope we're all well. Welcome back to another Sniper Sundays video. This is a series where we cover all of the trades taken in the current week and then give some analysis for the week ahead for the VIP members. So within this video, you're going to see us cover all 6 trades that we placed this week. This was a little bit of an unusual week. So we had NFP on Friday and we had Trump, playing his part in the markets, calling out some tariffs on Canada and Mexico, and we had the threat of the 100% tariffs on the countries that go ahead and use the BRICS currency instead of the dollar. So as you can see on the dollar, we had a huge gap up in the market. So this was where price closed on Friday night, and then this is where price opened on Sunday night. So a massive gap up in the market. Something like that you don't really see too often, but we saw it this week. So I'll show you how that affected our trading this week. And all in all, it shows that the markets are very volatile. If you have price moving like that out of hours, then price is very volatile, and we did see that this week. But yeah, without further ado, let's get into the video. So this was the first trade that we placed for the week. We actually got tapped into this on Friday. So about 5 p.m. on Friday, we got tapped into this position. Again, caught an entry in the wick as we do, and then price shot up, almost hit that previous high on Friday night, but it didn't. So then on Monday, when the market opened, or Sunday night when the market opened, should I say, price instantly opened all the way up here, as I mentioned. What happens in that scenario is price just gets filled up here. So even though we had our TP1 at this level, as I'm about to show you when I analyze it, price just gets filled all the way up here. So basically, instead of making 2.2% on our TP1, we actually got filled somewhere here. Now there was some slippage and some overnight market spreads applied, so we didn't get filled at this level, but I'll show you on my MetaTrader we got filled at this black line. So TP1 and TP2 got filled for like way more profit than we should have made from the strategy, just because of how volatile the markets were. So it made us some extra money. But yeah, I'll go over and show you how we found that trade. So first of all, price was in this uptrend previously, and we caught some long positions from the uptrend as well. Price was in a downtrend. We caught some shorts from that downtrend as well. If you go back a couple episodes ago, you'll see some shorts from this wick, taking them lower. What happened after then was, here was our downtrend. So 1 touch, 2 touch, 3rd touch. This was a downtrend. Price broke out of that on this candle closure. When price broke out of that structure, we call this a break of structure, just like that. Okay. Then what we do is we hop down on the 1 hour time frame, since this is a 4-hour break, and we mark up the next point of substructure. So the next bit of structure that forms outside of this trend. Okay. So this was our substructure. Price then broke above our substructure like that, and this becomes our break of substructure, or boss for short. After we have that boss level, what we look for, okay, so the price broke out of that boss level, we look for an entry on this retracement to catch price higher, just like that. So what we did is we took the fib retracement tool from this low here to this high after that breakout, and we were eyeing up this 71% fib level, just like that. So we caught our entry from this 71% fib level. We had our stop loss just a couple of pips beneath there, like that. And we had our TP1 here, TP2 there, and TP3 all the way up there. So that was a 4.12 trade roundabouts. So we mark TP1 here, TP2 there, and then TP3 all the way up here. I've had a lot of new members in the VIP group asking, like, how do we play the TPs, okay? And there is multiple answers to this. It's a way that you can tailor it based on your preferences, okay? So TP1, TP2, TP3, my usual structure is I'll take 50% of my profits out of the position here, 25% of my profits out of the position here, and then 25% out of the position here. The reason that's good is because let's say you caught an entry here, price just wicks that high and then comes all the way back down. I've already taken half of my money off the table at this point, and then once that's happened, I'm already having my stop loss at break even. So I take half my profit out, and then the second half gets closed out at break even, and I don't take a loss on that second half. Likewise, if you have something like that where price doesn't go all the way up to your full level, you've still taken 75% of your profits off the table, and then the last 25% just closes out at break even. So that's a structure that I really like. You don't have to use all 3 TPs. Obviously, the higher percentage you allocate to the higher TP, the more risk to reward ratio you're going to make, but then also the lower your win rate is going to be. You can also use a strategy where you just take this as your full position, and you're going to have a much higher win rate, but obviously the amount that you make when you win is going to be lower. But you know, as beginner traders, some people prefer having that certainty and having a higher win rate. It's a lot better for your psychology than missing out on some trades that you need a higher RR to actually take off the table. Likewise, if you're trading on a funded challenge and you just want to get that passed quickly, rather than leaving things to chance in the markets, you can use a structure where you just use that 100%. And you can also do things like what I commonly do when I'm on funded challenges in the challenge phase is I'll just have 2 TPs, 50% here, 50% there, and that's usually like a middle ground between that scenario and the full TP free scenario. So hopefully that answers people's questions about the TPs. In this scenario, we had our 3 TPs, and what we saw from that was where the market got filled. Okay, so at this level 91413, and I'll show you that. So this was the trade that we called out. So when price was at this level, respecting this fair value gap, we called out the 71 level that you see there. We said price is going to fill that and push to the upside. That's exactly what happened. Price came back, tapped that level, filled to the upside. Perfect trade. And then if we look at, so that was it, tapped in, we went stop loss to break even, market opened right up all the way at TP3. So we went from here on the Friday, we saw that it almost hit TP1 on Friday evening, and then as market opened we were already filled all the way up to TP3. So that was an amazing thing to see on Sunday night, Monday morning. And if you see here, this was on my account, you see this is where price got filled despite having our TP1 and TP2 at those levels, we got filled at this level, 91413. So our TP1 and TP2 got filled for 3.56R. So here you can see, well, I just adjusted it by a tiny bit there, but thereabouts. Market open got filled TP1, TP2, and then TP3 as usual 4.11 thereabouts on there. So from this position, using 50%, 25%, 25%, in total we made 3.71% from this trade. Now usually if the market didn't gap like this due to volatility, you'd have made TP1, TP2 there of course, but here we made TP1 and 2 all the way up here this week due to that volatility in the markets. So that's our first trade out of the way. Second trade was a Euro USD. Now, I mentioned the market was volatile. It worked in our favor at the very start of the week, but for the rest of the week to come, the market just didn't play how we expected it to, and that happens. We did have a volatile market in the week, so you'll see that in the trades to come. So next up we have Euro USD. This was a, let me clear that. This was a intraday trade. And let me just find where that was taken. So next up, next trade to close was this one, Euro USD buy limit. This was February the 4th at 10 AM. Let's find that. February the 4th, about 10 AM. Go there. And this was on the 2-minute time frame. So first of all, we mark out our Asian session. So here you can see the Asian low like this, got swept, and then price had a change of character and started pushing higher. It took out that Asian high there afterwards and carried on pushing higher. So what we were looking for was this liquidity up here to get taken, just like that. So if I make that a little bit clearer, this was our session range. The low got swept, price came and took the high, it broke out of that high, and we were looking for price to basically form another higher low and push higher, at least taking out this liquidity. Okay, that's a very valid trading setup. Okay, so just because you take a loss in trading doesn't mean that you did something wrong. Trading is a probability based game, so there's a chance that you win and there's a chance that you lose even when you're doing the right thing. So as I explained to all the members this week, even though you take losses, it doesn't mean that you've done anything wrong. And that's what people find hard when they're learning trading, is that they're doing the right thing and they're taking losses, and it makes you feel like you're not doing the right thing. And even vice versa, like people can be getting lucky and winning trades and they're actually doing the wrong thing. So that's why it's so hard to learn. But yeah, we saw price making higher highs, high lows. We had support from the EMA, which was not even touched once. Okay, so that's been respected very well. What we looked for was this low and this high for price to come back down, find some support and push higher. So we looked for a trade. I believe we entered this on the 61.8, right? No, the 78.6, so we took that even deeper. So we were looking for a trade off of the 78.6 here. Stops just a couple ticks beneath that low, targeting just TP2 on my intraday. So I'll take that level off. There's a trade that we were looking for. We didn't actually find that support and price just kept going down to the downside. So this was a stop loss hit. Like I mentioned, absolutely nothing wrong with that trade. Let me just double check. So this is on 2 minute, low, high. Yeah, so originally we were looking at the trade further along there. So at this level is where we eyed it up. Unfortunately, we didn't get tapped in all the way over here. So that's when we got tapped in, as you can see there. And then price just carried on to the downside and we hit a stop loss. So minus 1%, just like that. Again, Sniper Sundays, I'm not showing you just all my wins. I'm showing you all my losses as well. I'm showing you every single trade that I place, win, lose, or break even, so that you can see how I'm trading and just make you guys a lot more comfortable about losses. My strategy usually has around a 50% win rate, but when I win, I make like 3 or 4%, and when I lose 1%, as you can see here. So if I win 5 out of 10 trades and make that much, and then lose 5 out of 10 trades and lose that much, you've made a lot more than you've lost. Okay, so become comfortable with losing in trading if you want to be successful. Next trade, pound US dollar, very similar trade. Here we are on the 5 minute, about 20 past 11 on the 4th as well, I believe. I just accidentally loaded up my trader. Get ready for the boin. Pound US dollar. Load this up. 5 minute. On the 4th at about 11. We didn't get the buying from MetaTrader. I'll close it down. Somewhere here. So we're on the 5 minute GU, and we're looking at the 100 EMA. I can see from that. So change my EMA to the 100, and we were looking at this. Yeah, so let's line up the Asian session. What you can see here, the Asian low got swept. This is on the same day as the previous trade, by the way. So the Asian low got swept, price came back inside the Asian range. We have 1, 2, 3 instances of support. Price came up, didn't actually take the liquidity from this Asian high, and then price came back down. So what we were looking for is from this low to this high, price to come back down, catch a trade from the 71, stop slightly beneath the low, TP1, TP2 up here. Again, on any other day, this is a very sound trade. It's got about a 50% win rate. When it loses, we lose 1. When it wins, we win 3. That is a valid trading system with an edge on the markets, and you can see this is like what, episode 6, and I think we're up like 20% so far, everything transparent. So yeah, again, we were looking for this to act as support. We had this candlestick here, which was a pin bar off of that EMA as support, which gave us confirmation. But unfortunately, today wasn't the day, and we lost 1% there as well. So there you can see, another 1%. Next up, another loss, pound US dollar swing. So we'll stay on the same chart, and when this was a swing trade, what we were looking for here, again, the dollar was very, very volatile this week. It was actually quite brutal to us. So what we were looking at is this trend here. We had higher lows, higher highs. That broke beneath there, which gave us this level of substructure, just like that. So this was our break of structure. This was our break of substructure. What we do, previous high, previous low, just like that. We look for price to retrace up to one of our key levels like this, and then trade price to the downside. We took a sell around here, stops above the high, TPs all the way down here, TP1, TP2, TP3. Unfortunately, we got stopped out and we lost 1%. So there you go, lost 1% there. Next up, Aussie dollar swing. Same trade idea, just on Aussie dollar. So you can see here was our uptrend. I actually drew it like this, okay? So here's a tip. You want to find the trend that lines up with the most amount of lows like this, even if it's a fake out beneath. So it's quite easy to view a trend like this, but you're kind of missing out all of these like highs as well. So this is a trend on its own, kind of, but you see how you just don't have that support from it there. Whereas if you view this as a fake out and this becomes your trend line, it becomes a lot more obvious as where the trend is actually in the market. Okay, so this was our trend up, that broke beneath. We didn't actually find, so if you view that on the 4 hour, we didn't actually find a solid level of support up until these areas here. As you can see, price was just sort of channeling down there, and we didn't actually get a proper retracement higher. So for that reason, we said that this was our substructure, that broke beneath, like that. We were expecting, again, price to come up, fill this imbalance, and then push back to the downside. It didn't. Price broke above. Same story as the pound. Entry up here. It was a very nice entry at first as well, but then price reversed higher. Stops above the previous high. TP's all the way down there. He was looking at nearly a 6R, but price reversed on us and hit stop loss. So there you go, another loss. 4 losses in a row this week. I know all the new members, all the newbies were screaming, "You can't trade, you've just lost 4 in a row." Yeah, alright mate. Euro, next trade. But that's the thing, like you have to mature in trading and realize that losses happen. So this week I lost minus 0.3%. Okay, that one trade carried almost 4 trades worth of losses. Okay, so this is why you have a sensible win rate and risk to reward ratio. I took 6 trades this week and I only won 1 of them. and still I only lost like 0 point something percent, you know. So you have to become comfortable with losing in trading. It is just part of the game. If you're not comfortable with losing in trading, you need to find a strategy like this one that just uses TP1 and full takeout at TP1, and you'll have a higher win rate, but you won't make as much as if you have a more sensible win rate. Somewhere between like 40 and 70% is usually at like the optimal level for most strategies. It provides you with a balanced win rate, but you also then make a lot more on those trades that win. And it is just something you've got to get over. The way that I educate this for our members, and it works really, really well, is just backtest heavily. Like go over the previous charts using this button, bar replay, go back in time, play the scenario out like that, and just gather weeks, months, years worth of data using the strategy. And then mark up each day, each time, each trade, how much you won, how much you lost, and then go through month on month and see how much you lose when you lose and how much you win when you win. And you'll be so comfortable with the fact that you will lose in trading. Most winners and most people that are successful have lost far many times than losers have, because losers don't like losing, but winners, we're comfortable with losing. We know it's just part of the process. You're not going to win every single trade, okay? So hopefully this is pure transparency. I've just deleted one of my tabs. Hopefully this is pure transparency. You can see week in, week out. I'm showing you all of my wins and all of my losses. You can see that I lose week in, week out quite a lot. Like I've got like a 50% win rate, so I lose quite a lot of trades, about half of them, but I'm still up massively. Okay, so get comfortable with losing if you want to be a winner in trading. And then last but not least, we had a Euro USD position, which we actually closed out at break even. So let's go over that one before we finish the video. Euro USD. Let's find it. Here we are, tagged in. Euro USD 5 minute. This was 11:30 on the 5th. So let's go to that. 5 minute. 5th. 11:30. This was an intraday trade, so we popped that EMA on. I want the 50, and I want to see the Asian range. So what you can see here, Asian range, price broke above it, used it as support to push higher, and now we're looking for this trade to continue higher, just like that. Okay, so what happened? 11:30 would be within this. So we had higher, low, higher, low, higher, low, higher. What we were looking for is from this low to this high, just like that. We got tagged in on this 71 level here. No, I don't think we did. That doesn't ring a bell. We got tagged in. We entered on this fair value gap just below that 61.8. Okay, so we had this fair value gap here, like that. And we actually caught an entry off of this, tapping in, I believe it was. Pips, stop loss would have been a few pips below there. And then TP1, TP2 all the way up here. Now, we had some news here on the 1 o'clock. So price was running nicely in profit. This was a trade, EMA being used as support, higher high, higher low structure. Price came back, tapped a fair value gap in line with the EMA, in line with the fib levels to push higher. And then some news dropped at 1 p.m. here. I think it was the jolts, something to do with US employment. And then price just reversed lower. So when price did reverse lower here, back to our entry, we closed out at break even, and I'll show you that there. So that was the update, running nicely in profit. Close at break even at about 13.18. So people had a nice opportunity within this little spike back up afterwards to close out for some profit. Okay, somewhere between like 0 to 1 hour profit. we're just going to call that close at break even. Okay, so even though people would have made a little bit of profit on that, we're going to say we close that at break even there, so 0%. All in all, we had a banger of a trade at the start of the week, and then followed by 4 losses and a break even in what has been a volatile week for the dollar, and therefore a volatile week for the markets. So this week we lost 0.29%. Losses happen, get over it. You're not going to win 52 out of 52 weeks in the year. We're going to have a lot worse losses than this in future, okay? This is not even 1%. Like, you would basically class that as a break-even week, okay? I'm going to give everyone the benefit of doubt. Because it's a negative, we're going to call it a negative week, but it's only 0.3%, you know, get over it. Running total is still 20% from 6 episodes. So you can see there, we've been on a smashing run. Law of averages, we're going to have a losing week. But yeah, buckle up. We're going to have some losing weeks that are a lot worse than that. So like I said, you just got to get comfortable with that as a trader. But yeah, hopefully that has taught you something about trading. It's not just wins all the time, even though we do win a lot, and we've won a lot so far in this Sniper Sunday series. So law of averages, we were bound to take a losing week at some point. But hopefully this has given you confidence that you can lose trades as a winning trader. It happens. I know there's these fake gurus online that claim that all they do is win. They've got a 99% win rate strategy with like a 10R every single trade. That's just not how trading works. So here is how trading actually works. You have wins, you have losses. Overall, you win overall. So our running total so far on Sniper Sundays is still up 20%. This is based on using 1% risk per trade. If you use 2% risk per trade, you're up 40%. If you use 3% risk per trade, you're up 60%. If you use 5% risk per trade, like on a personal account, you're up 100% from all of these trades that I've called out in the VIP group. And I've shown you the analysis for this on our Sniper Sundays. Okay, if you want to hop inside the VIP group, we've now upped the price. Membership is either £50 a month or £1 a day. Okay, so you can literally pay £1 a day and join the VIP group and get all the trades that we're calling out, direct one-to-one access with me to answer any of your questions, as well as access to the VIP lounge with over 40 traders, which is a great networking circle if you're looking to become a trader. Put your analysis in there, get some feedback on it, ask some trading advice. We've got so many gems being dropped inside that group at the moment, and we're seeing a lot of success from our members learning the strategies for themselves, placing their own trades without us, and making profits on their own, becoming a self-sustaining, long-term, profitable trader, which is exactly what we want. So do drop me a message if you want to join the VIP. Like I said, it's either £1 a day or £50 a month. Next month, that is going to be going up to £2 a day. You know, £1 a day is just super, super cheap. But because it's still quite fresh, we're building the educational side of things up. We're dropping it for very good value right now until we build up the community some more, and then prices will be going up. So every single month we'll up the price. Get in now while it's cheap. Just drop me a message if you want to join. Hopefully you've learned a lot from this week's Sniper Sundays. Even though I'm not posting a massive win, there's still lots of educational bits that you can take from it. Hopefully the rest of the month is going to be a lot better if the markets calm down a little bit. We've got NFP out of the way this Friday, so we're hoping for much calmer markets for the rest of the month to come, touch wood. But inside the VIP group, I'm now going to carry on the rest of the video to go over my analysis for the week ahead. And for everyone on the free side of things, I'll see you on the live sessions tomorrow morning. So until then, take care guys, catch you tomorrow.